Hi everyone, so we move into chapter 19, Audit and Internal Control. And you may recall from my post on emphasis within the SBL course, this is certainly one of the core chapters. This is one of the chapters that certainly I would encourage you to make sure you have a good fix on. You may recall that I identified 6 chapters, this being one of them. Many of them linked in to a leader or closely tied to leadership. So let's take a look at the first 3 sections here. The first one relates to internal audit. So in essence, when we think about internal audit and indeed the role of the audit department and indeed the audit committee, we think about a function basically that is an assurance activity. In effect, an activity that provides assurance. It provides sort of, if you will, comfort. Comfort in relation to what? Comfort in relation to the organization's overall operations and indeed encourages a systematic, disciplined approach to evaluate and improve the effectiveness of risk management, control and governance processes. Now, that's quite a mouthful, okay? That's a lot of information. In essence, what we're saying is that this is a function that, broadly speaking, helps the organization to achieve its overall objectives. That's a theme that you'll see outside of this chapter also, the idea that we have systems in place that allow the directors, the board, etc., to do their duty, which is basically to direct and manage the company efficiently and to ensure that it achieves its overall objectives. Okay? Now, moving to the code, or certainly the UK code, we'll be familiar with the 2 sides of CG or corporate governance in the sense of, one side of the Atlantic, broadly speaking, we have principles or guidelines. So, going back to the code itself, you'll recall that the code, in effect, came into play in the early 1990s as a result of a series of scandals. So given that, and indeed the various variations over the last sort of 20, 30 years or thereabouts to the code, what do we say right now in relation to the code and indeed internal control? Well, first things first, what the code suggests is that there will be procedures in place to manage risk and indeed oversee the framework, the IC framework. Now, we'll be aware that internal control is basically a check. So any business, whether or not it's the business that you work for or any business that you look at, will have a series of controls, a variety of different controls. A business is made up of a series of controls. So what we need to do is make sure that we oversee them, make sure that they work as per the next key point here. The independence and indeed effectiveness of internal and external audit. Without these 2 areas, particularly when we're talking about listed companies, we're talking about large entities that are owned by shareholders, institutions, etc. If there is a lack of independence or a lack of effectiveness or both in the procedures designed to manage the areas that we discussed above, we have a problem because it's highly unlikely that a business is going to achieve its overall corporate objectives. And when we think about corporate objectives, if we simplify it, what is a for-profit business going to have as an overall corporate objective? Basically, shareholder wealth maximization. So without these 2, that's not going to happen. Now, in terms of the sort of flow, as it were, quite a lot in this diagram. So let me slow it down a little bit and break it down for you. Let's take the left-hand side of the diagram first. Now, this is important to give you a sort of an overall feel for this chapter, okay? Broadly speaking, just about everything in this chapter is sort of summarized in here in one way, shape, or form, okay? So just dealing with the board of directors, who are they? Well, experienced experts chosen to direct and control the business. So what is their role here? Basically to assess risk and indeed, given that assessment, to respond to their assessment. How do they do that? Well, we're familiar with TARA. They manage in some way. So once they've, I guess, identified risks, through the use of a tool, a technique, pestle, et cetera, what we need to do is we need to prioritize and indeed management. So how do we do that? Well, we put in place a series of controls. So here you can see, leaving the audit committee to one side for the moment, is we have the board of directors, we have some work to do, and we have the controls in play. Let's devise the controls, obviously with some input from audit committee and indeed elsewhere. On the right-hand side of the diagram, we have the audit committee. Remember, independence is key. So what is their function? What is their role? Well, clearly, monitor, direct, and delegate to, and indeed help create controls and create the internal audit department. What does the audit department, internal audit, then do? Basically report back. So if you will, broadly speaking, and indeed individually on this side, we have a sort of a loop that runs around the business, really focusing on, in particular, the effectiveness of the internal control function. Okay, let's move on to the next area here. Now, any business needs to make a decision, and there are various factors in assessing whether or not an internal audit department is required. Now, it depends on the scenario, it depends on a variety of factors. I won't run through each of these, but you can see that to a large extent, the factors to consider are fairly commonsensical. Okay, the size of the business, the number of employees. This one here, a little bit tricky, cost benefit. I would have thought that if you were a board director, if you were a CEO or even a chair, it's sort of difficult to assess costs and benefits because you're talking about non-financial factors. You're talking about factors that are very difficult to gauge. This is a tricky one. For me, the others are fairly straightforward. Now, number 4, changes, of course. If we have, significant, comprehensive changes in the business, let's say, for example, we have a merger of 2 listed companies. Clearly, that's a massive change. And we're familiar from our studies of change management, generally speaking, that making change for business is very, very difficult. So that would throw up a red flag. Significant changes in a business should focus a director's mind, perhaps the CEO, perhaps the chair's mind on, well, maybe we do need an internal audit function. This one here is, I guess, in one sense, a little bit of a no-brainer. If we have consistent or ongoing or indeed significant problems in some way, shape or form with internal control, let's say a fraud, let's say some issue with regard to embezzlement or some sort of hack, etc., the bottom line is that things happen for a reason. So out of all of these, that might actually be the most important one. I mean, that is indicative of problems. Okay, so those are the factors that should be considered in terms of the assessment of whether or not IA is required or should be introduced or not. Now, note, just on the whole area of internal audit, we're focusing here on internal audit rather than external audit. In some industries, as you'll see from the study hub, compliance audits, or in effect having some sort of assurance activities, assurance procedure, is required regardless. We know that there's no specific requirement in law to have an internal audit department. It depends on the factors above. That's up to the director's judgment, or indeed, let's say, the audit committee's judgment. But for example, aviation, and indeed in other industries as well, compliance audits, so that assurance activity is required regardless, and must be adhered to. Okay? In terms of independence, I mean, this is a tricky one because, as you'll see when we flow down the rest of this particular mind map, I mean, strictly speaking, if we have an internal audit department, then these individuals within the department are employees. They're not independent, as with, let's say, the external auditors. More of that in a moment. In terms of the definition, we're talking about, as you can see, and as mentioned above, an assurance and consulting activity, which must be independent and indeed objective. That's in one sense what sort of creates the problem, as I've said here, because he or she will be a paid employee. So in effect, I guess we're suggesting that an internal audit person, man or woman, is going to be reporting or checking on their own company. So obviously objectivity and indeed oversight may be an issue, but it's certainly essential. What do we rely upon in that case? In other words, what can companies or indeed alternative audit departments, what can they fall back on? Well, ethics. Now, ethics, indeed the ethical code, you'll be familiar with the 5 elements. Strictly speaking, we're talking about guidelines, we're talking about principles. So we hope that internal auditors, if there is a function, adhere to those 5 elements and certainly adhere to the objectivity element. In other words, being free from bias. That's absolutely critical. Now, does it always work well? No, it doesn't. You'll know from your reading of the financial press, even a cursory look, that in terms of the relationship between client and indeed auditors, there's just too many examples of scandals, too many examples. There are 3 or 4, I believe, in the hub. There's too many examples of that relationship going sour or being, if you will, to use the word on the mind map, being inappropriate in some way. Okay? Now, given that, and given the whole idea of the agency principle, I mean, what we're supposed to be doing is the directors are supposed to ensure that the company is directed and controlled correctly. So, for example, a director having some form of close tie or familiar, shall we say, relationship with, let's say, an external auditor is clearly inappropriate. So what can we do? Well, again, to be honest with you, there's a lot of common sense here, but as we know in the trade and generally in business, sometimes common sense isn't so common. I don't think anything here is sort of overly complicated or brain science. I mean, we would expect a professional relationship to be based on simple good morals and good business practice. For example, the ethical code. We would also expect good communication. We'd expect people, with the right skills and experience, and we'd also expect, again, referring back to the code, we'd expect honesty or indeed integrity per the code. So really, if you're faced with questions and you're wondering what to say, certainly in this area, some element, although there's a lot of content in this chapter, some element of the relationship, for example, between the board and indeed the audit committee, or indeed the audit committee and internal control, some of it is very much commonsensical. Let's rely on good common sense. Let's rely on strong ethics, and let's rely on good governance procedures as well. Moving on from there, bear with me one second. Moving on from there, taking a look at the sort of audit committee in terms of its role. I mean, clearly, as we saw from the diagram above, the audit committee is in effect top charge, aren't they, of the internal control function, assuming that there is one. So, in effect, what we're talking about is effectiveness, certainly recruitment, including the chief internal auditor, indeed evaluating performance, not just of the CIA, but also the team, and indeed reviewing results of internal audit reports, and indeed involvement in the overall plan. So again, as we saw from the diagram above, you'll recall that I said that diagram sort of summarizes just about everything, not quite, but just about everything in this chapter. Certainly this area is important. The audit committee is key. So, flipping that on its head, if we have a weak audit committee or a committee that lacks experience, then we have a big problem, because really the audit committee is the linchpin between the board of directors and indeed the internal control system and indeed the internal control department. So in terms of effectiveness, well, clearly, it's linked to financial reporting and indeed the quality of the reports produced. We certainly, as I've just mentioned, we do need a certain level of expertise. That should be sort of a gimme, really. That should be a certainty in the areas at least of accounting and finance, but there are other areas that we need. We need expertise in the industry itself. We do need some legal expertise, a variety of expertise. So, even if we had that, what might be the reason for a given audit committee not to perform well? Well, using our common sense, I think there's some basic things and there's some things slightly out of left field. First things first, I guess, is, tone at the top, or indeed support. If you have a group of directors or a board of directors that don't buy into or don't want to buy into the importance of the audit committee, remember the diagram above, the two sides to it, then you have a big problem. Because at the end of the day, the directors are paid employees in control of the business, probably very, very experienced, big personalities. If they're pseudo-anti the audit committee, whether or not it's a good quality audit committee or not, then we have a problem. Linked into that, in terms of communication or coordinated communication, if there are communication difficulties between any function, between the board and the audit committee, or the audit committee and internal control, or vice versa, that creates a big, big issue. And again, final point, as I've said up top, if we don't have the right people on the audit committee, not just experience, but also expertise, we want diversity, male, female, different ethnic groups, etc., that can also create issues for sure. Okay, so final section here in this third point, part one of this particular video, just to break it up into two. There's so much information for us in this particular chapter. In terms of the auditors having issues, making requests, etc., again, some common sense here. So in relation to requests and inquiry, imagine yourself on the board of directors, you receive inquiries from the audit committee. Certainly, they shouldn't be waiting for information. They should receive what information that they require in its entirety, no hold back information, and they should receive it on a timely basis. Again, there's some common sense there. In terms of responses, what's an appropriate response? Now, because of the position that the audit committee holds in terms of being broadly an independent group that to a large extent are sort of overseeing, some might say spying on the company, on the work, the executive work of the board of directors. This is a little bit of an issue, and certainly I've seen or heard of difficulties here. So in terms of appropriate responses, clearly, the responses need to be agreeable, and they need to focus on solutions. If we receive responses or inquiries as a board, then what it needs to lead towards is some sort of action plan to deal with that inquiry, whether or not it's in relation to a risk or something else. Now, again, in terms of the responses, I think that you will agree that much of what we see here is, again, what you would expect. Pretty straightforward. It should be, written by an appropriate level, discreet, certainly diplomatic. It should specify actions that management can commit to, certainly realistic in terms of timetable, and indeed limited to first-hand knowledge of supporting documentation. So, in other words, agreeable, comprehensive, timely, and indeed, focused on a solution. Okay, what it should not be, and this is certainly I've seen one or two examples of this in my time. What it should not be is a sort of an opportunity to argue. an opportunity to avoid, an opportunity not to deal with the actual issue or the cause of the problem. It mentions here knee-jerk reactions. So really, in essence, a fair degree of common sense here, agreeable, comprehensive, and focused on a solution rather than combative. Okay? I hope that makes sense. Now, in terms of point 4, or section 4, we're going to deal with this in the second part of this video. I hope that the first 3 sections were helpful and made sense. Thanks for listening so far.